Hi everyone, welcome back to Saheb Academy. Today in this video we are going to talk about what is this historical cost concept that we have in accounting and what it really means. See, it's really simple. What this concept says is that whenever you purchase any asset and you want to record that asset into your books of accounts, then you have to recognize that asset and record it at its cost price. But now you will say, what is cost price? Understand properly. Whatever you have paid to acquire that asset, that would be the cost, and also whatever you have paid to bring that asset into its working condition. Let's take an example to understand this. You might be a little bit confused over here. Let's say you purchased an asset, okay, and you paid the money. That would be the basic cost, right? What you have paid for the asset. And then let's say you have paid shipping charges to bring that asset to your factory, to your business place. And then let's say you have paid someone to install that piece of asset. Let's say it's a machinery. You have paid some installation cost to install that asset. And then you want to check whether it's working properly according to its objective. Then you brought some professional to test that piece of asset, testing cost. So all these costs which you incurred, purchase cost and then this additional cost to bring the asset in its working condition, all those things will be added together and that entire thing will become the cost of the asset. Is that clear? Yeah, the expenses which you incurred, testing costs, shipping charges, and then installation costs, all these are what? These are capital expenditure which will be added with the cost of the asset and it will be capitalized. What it means to be capitalized? It means that it will be taken to the balance sheet. Yeah, normally what happens of expenses goes to profit and loss. Yeah, they are expense, they go to profit and loss. But these expenses which you incurred, shipping charges for that asset, installation cost, testing cost for that particular asset, then these are not revenue expenditure, these are capital expenditure which has to be capitalized because these are happening one time, not always. You will not have installation cost every year or every month or something like that. No, but repair cost is something else. Yeah, if something happens and you pay something to repair, then that repair cost will go to profit and loss. It will not be capitalized. So you understood what is cost? Cost is the purchase cost as well as any additional expenses which you incur to bring the asset to its working condition. Is that clear? Right. Now let's come back to this historical cost concept. See, what it says is, see here, this concept states that a business must account for and record all the asset at the original cost or purchase price. Now you properly know what is original cost. Cost plus any additional expenses, right? On their balance sheet after accounting for any depreciation. If there is any depreciation, then that you have to deduct. Okay, fine. So change in the asset's market value or any sort of inflation does not impact its value reflecting on the balance sheet. Now you recorded the asset at its cost, right, in the books of accounts, and later it got reflected in the balance sheet. And if there was any depreciation to be charged, yeah, let's say the time has been passed, then that depreciation will be deducted and the carrying value or the book value will be recorded in the balance sheet. And if there is any changes in the market value, then that will not be impact. Yeah, that will not impact any way to your the value which you have in the balance sheet. Yeah, change in the assets market value or any sort of inflation does not impact its value reflecting on the balance sheet. You will completely ignore the market value in this historical cost concept. Yeah, so let's take an example to understand this. See here, let's say you have purchased machine for 9,80,000, yeah, 980,000, and let's say you paid installation cost of 20,000, and then estimated useful life of this asset, of this machinery, is 10 years. Okay, so now what you will do? Let's say you purchase this on 1st of April 2021 in the beginning of the financial year. So now you will recognize the machinery in your accounting books. The journal entry will happen at 10 lakh. 9 lakh 80, that's the purchase cost plus the installation cost, because installation cost is what? It is a capital expenditure which will be added with the cost of the asset and the whole amount will be capitalized. The whole amount will be treated as the cost of the asset. That's what it means to capitalize that amount, okay, recorded at cost. Fine. And then what will happen as the time passes by? You all know we charge the depreciation. Yeah, we charge the depreciation. We spread the cost of the asset over its useful life. Now the useful life is 10 years, estimated useful life. So what are we going to do is we are going to charge depreciation over the useful life of the asset. Okay, we'll decrease the value of the asset, and small portion of the amount will go to profit and loss. I mean, we will charge the depreciation. Fine. So what will happen then? See here, at the end of the first year, 31st March 2022, 1 year has been passed, 12 months have been passed. So we will charge the depreciation. See here, original cost is 10 lakh, 1 million, right? And then depreciation we will charge. Now there are many methods to calculate depreciation, but let's just say we have chosen simple straight line method, depreciation SLM method. What's the formula of SLM method? Cost, original cost minus scrap value, yeah, whatever the value that you can fetch by selling it off at the end of the useful life. After 10 years, at what price you can sell this machinery, that would be the scrap value. But let's just say in this example I'm taking scrap value as 0. There is no scrap value. So cost divided by useful life. So simple here, 1 million, yeah, 10 lakh divided by 10, that is equal to 100,000. Yeah, 10 lakh divided by 10 years, that's equal to 1 lakh 100,000. Is that clear? That is the depreciation you are going to charge every year. You all know in SLM we have same depreciation every year. Yeah, this is not reducing balance method, straight line method. Every year same depreciation you will have. So 10 lakh minus 1 lakh depreciation, the carrying value or the written down value will be 9 lakh, and on 31st March 2022 in the balance sheet you will show 9 lakh as the value of that machinery. And then what will happen to this depreciation 1 lakh? This will go to profit and loss statement, right? And then let's say 1 more year has been passed, 31st March 2023. Now what you will do, this 9 lakh is the book value, the carrying value. This you will take again minus 1 lakh depreciation. Now what's the carrying value? What's the written down value, the book value? It is 8 lakh. Okay. And let's just say on the same date, the market value was 12 lakh of that machinery. For some reason, the market value is 12 lakh. Now what you will do? You will completely ignore this market value. You will not consider that. In the balance sheet of 31st March 2023, you will still show the machinery value as 8 lakh because that's your book value. That's what historical cost concept says. You have to carry the asset at its cost price. You have been carrying at its cost price, isn't it? Yes, cost price and less any depreciation. Cost price less depreciation. Is that clear? This is what will happen in cost model actually. But we are not talking about the accounting standard over here, but this is what mostly will happen. Fine. Historical cost concept. Now you might be wondering, why is this concept called as historical cost concept? See, it's really simple. If someone asks you on 31st March 2023, what is the cost of this machinery? Then you will say it is 10 lakh. Yeah, it is 10 lakh. The cost of the machinery is 10 lakh because that's the historical cost. But if someone asks you what is the book value of this asset, then the book value or the carrying value is 8 lakh. Is that clear? So this is the thing. Okay, so this was the whole historical concept, and I hope you have understood each and everything. So that's it for this video. See you in the next video. Bye.